Never knew you were the someone waiting for me. 'Cause we were just kids when we fell in love, not knowing what it was. I will not give you up this time, darling, just kiss me slow. Your heart is all I own, and in your eyes you're holding mine. Baby, I'm dancing in the dark with you between my arms, barefoot on the grass, listening to our favorite song. When you said you looked a mess, I whispered underneath my breath, but you heard it. Darling, you look perfect tonight. Well, I found a woman stronger than anyone I know.
You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. here's Dwayne.
Hey, good afternoon. Welcome back. Today is Monday, 13th day of May, 2019. Thanks for joining us, whoever you are, wherever you are. We're just glad you're right here, right now. I have a chart up of the S&P 500 Emini Futures, as I do, and I'd like for you to be able to see this chart coming up on a historic moment here, possibly during this radio broadcast. So, if you can't see the chart, go to our homepage at CFRN.net. On the right-hand side, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. If you find yourself out of the office, away from the desktop, not to worry, go to youtube.com/CFRN/live, and there you will find each and every day a live simulcast of the show during the live show, brought to you by the good folks at YouTube. Thanks, YouTube. All right, this chart we're looking at, S&P 500 E-mini futures. So, we had a gap lower open last night on Globex, Sunday night. You can see what's happened since. Now, these are old zones. These are not this week's zones. Of course, partners and passport holders did receive the zones this morning, 6:15 a.m. Eastern, as they do. They had an opportunity to get them on their charts before Wall Street even woke up. Now, this target down here, it says target. What's that all about? Why is that a target? Doesn't appear to be a zone. It's not the top of the trend line. Okay, let's investigate. We've been stalking this for quite some time, since December 26th. Just looking for a, and then as this thing broke, really, since January 11th. Up here, as we said here, and as we said here, on the daily chart, S&P 500 E-mini Futures daily chart, we said here that the shallowest possible retracement would be back to the BBC, and then the next good support would most likely be a 24% Fibonacci retracement on the daily chart. Got the BBC, but no 24. Here, we said the same thing. We tend to stick to our story. That's a beautiful thing about truth. We said the shallowest potential retracement here would be back to the BBC, which we got. Did we get a 24% Fib retracement? Nope. Now up here at new all-time historic highs, we said the shallowest possible retracement will be back to the BBC. Did we get that? We did. And now, ladies and gentlemen, for the first time in this bull run, we got a almost, not there yet, couple more points, 2805-ish is the 24% Fibonacci retracement from the December 26th low to the May 1st high. And this little line right here. Now, let me scrunch. Now, this area is of particular importance, not only because it's a 24% Fibonacci retracement, which, by the way, should give us quite a nice bounce. Will it bounce us all the way back to the BBC? Let's not get ahead of ourselves. Let's just wait for it to get down to that 24% Fib. Now, going back here to October, right, where we got the bearish cross, that ultimately led us to the worst December since 1931. Leg and a retracement. Good resistance. Leg and a retracement. good resistance. And then that December, and that January rally that took us into February, into March, into April. At this point, we're still in March. Good resistance, right? Knocked it back down to the BBC. We get another leg. We power through this area. Remember, resistance, resistance, resistance. Resistance becomes support. And then we go on to put in new all-time historic highs. Now, you got to understand that while this is the 24% Fibonacci retracement based on the December 26th low of 2018 and the May 1st high of 2019, it was not a 24% fib here. It was not a 24% fib here. Price had to go from the low to this high to give us this 24% fib. Now, I know it lays across like that, so just don't let that confuse you. Just remember this. Resistance, 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 support. Okay. Now, we're falling literally at the speed of light, it seems. But let's watch what happens when it gets to that 24%. That's the now, remember, that's just the shallowest possible Fibonacci retracement on the daily chart. I'll only go one more down, 38. That puts us at about 26. That puts us 100 points below where we are right now. Going to the 38. Oh, well, it can't pull back that far, can it? Look at this. From this high to this low, that was a 62% Fibonacci retracement, literally to the tick. So don't think it can't happen, because it can. And I'm not predicting or forecasting a 62% Fibonacci retracement, which just so happens to be right where we caught the bullish cross. That's important. We caught a bullish cross on January 11th. We've not had a bearish cross until today. That's kind of an historic event, right? One for the record books. Now, I ask you, my brethren, look at where we're crossing and look at where we last had a bearish cross. What? I know. I love it when that happens, right? Good stuff. All right, let's watch it on the 30-minute. We can see it a little more clearly as we work our way down to that. Now, this is a 30-minute chart. Remember, we were looking at the daily chart. We're back to the 30-minute, so we can eyeball it as it comes down. Let's look at the numbers from around the world real quick. They go to Michael. Get a recap of what happened in the live training room today. I trust you all had a good time on Globex last night. We try. All right, numbers from around the world. Cash markets starting here in the U.S. The Dow currently down 635 points. You did not mishear me. I said 635 points. You might remember last week John was talking about a potential 1,000-point down day, I think. Is it today? I don't know. NASDAQ. Now, back to the Dow, that's a drop of 2.5%. NASDAQ down 263 points. That's a drop of over 3%. S&P 500 is down 72 points, 2.5%. And the Russell 2000 down 45 points, almost 3%. Yeah. In the commodity basket, crude oil down 49 cents, trading 61.17 last. And I think I heard a few folks say you caught this move on the daily double, so that's That bell's for you. Okay. Back to the S&P. All right. Gold up $12. Trading $12.99.40 last. Brushing up against 1300. That's a gain of almost 1% for gold. Now, in the Asian markets at the close, the Nikkei was down 153 points. It's 0.75%. Shanghai down 35. That's 1.25%. And the Hang Seng, what? Gained 239 points, almost 1%. In the European markets, the FTSE lost 39 points by the closing bell. I don't think they have a bell. The DAX dropped 183 points. That's 1.5%. And the CAC fell 64 points. That's 1.25%. So, in Asian markets, it was a mixed day because of this unusual performance by the Hang Seng. Certainly a red day in the UK. And here at home, it is a big red Radio Monday as the markets seek a bottom or at least a place to bounce from. We've had no real bounce since the Globex opened last night. Now the gap lower open, we closed Friday at 28.87.25. Last night we opened at 28.58.50. You do the math. Now, do we have a gap fill alert positioned for the S&P, the Dow, the Russell, and the NASDAQ? Why, yes, we do. And it will sit there until it's filled. All right, let's go to Michael, get a recap of everything that happened in the live training room today. Michael, are you ready?
I am ready. Okay, let me bring charts over here. Oops, I almost put them on Valerie. Hang on. There we go.
Got him.
Got him. Excellent. Okay, I will get into it right now. All right, good afternoon, everyone. Today is Monday, the 13th day of May, 2019. If you've not taken a free trial with us, go to the homepage at CFRN.net. Over here in the right-hand column, it says 5-day free trial, apply.cfrn.net. If you click on that, you'll be brought to this page, where all we ask for is your email, your first name, and how you found us. Hit the submit button, and you'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't click the confirmation link, we don't know that you took the free trial, so you got to click that. All right, the spreadsheet. Now, the spreadsheet goes back to January 2nd of 2013. January 2nd of 2013. And it's our daily results. We fill it out at the end of the training room every day. And today, well, I have to say, if you're going to read the spreadsheet, you read all the CFTC risk disclosures down at the bottom. And today is the 13th day of May, 2019. Today we made 4 ticks in the euro. We lost 6 ticks in crude, and we made 16 ticks on the ES. That put us at plus 165 on the morning. Today it took 21 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 13 trade opportunities. So on the month now, we're up $1,500. That's over 9 days, averaging $166 per day. On the year now, we're at $10,040. That's over 83 days, averaging $120 per day. Now that's 1 contract, 2 hours per day. Okay, 1 contract, 2 hours per day. All right. Now let's take a look at what we did or didn't do. We didn't do anything with gold today, but we'll look at gold. See, it moved around quite a bit. In the pre-market, gold was killer. Look at that. It was just, it was a beautiful thing in the pre-market. But I figured once the markets opened up, gold would probably get a little choppy, and it did. And we didn't end up with any trade setups all through there. No trade setups. There's one trying to set up right now, but it's not there yet. And we have dynamic resistance and the high of the day right there. I knew this 1300 level I knew was going to be like a magnet and probably get rejected from there. No, we'll see what happens the rest of the day, but not a lot of opportunity there on gold unless you were trading the pre-market. If you're trading the pre-market, it was all over the place. All right, on the euro, we had a break even there and a close below the trend line here. That close below the trend line, we picked up 4 ticks on. There was a follow-up trade right here that we missed that went 4 ticks and a little further into profit. Another one right there, and then during the break, it totally flattened out. Look at that. That's during the break right there. That is just, that's just annoying. Crude oil. Let's see here on the crude. We started out right over here. Now crude had a big run this morning as well. You know, when all that stuff came through, all that news came through about China and tariffs and all that. But we started out with a stop out here on the crude, sadly. We missed a short here. We missed a short here. That would have been a break even. That probably would have given some profit. Then we had a break even trade there. A break even trade there. +2 on that one to put us down to -6. A break even trade there. We missed that one and that one, both of which were winning trades. And this one right here was a break even. You know, this area that I have highlighted here, it's not a weekly trading zone, but it's an area from last week, not last week, but the week before, that I had highlighted. And I said, you know, watch for price to get back to that area. And it has. And then we get into the break. Now, during the break, looks like there was a long opportunity right here for a little bit. Not too much, just a little bit. On the ES, now we missed, sadly, quite a bit on the ES today. Hang on. I'm scrolling, trying to get back to the beginning of the day. Okay, here we go. Hang on, it's loading stuff up for me here. Okay, here we go. This was our first trade of the morning. We picked up 8 ticks on our first trade of the morning and got the goal for the day in one trade. We missed the follow-up trade here. That was right in my log. That would have been profitable. And now I'm trying to scroll. Here was a shorting opportunity that we missed. Here was a long that we missed. This would have been a break even. This would have definitely been profitable. Then it got really choppy here for a little while. It got choppy. Broke out of the chop, gave him a long trade right there that I didn't get filled on. Turned around, went down. Again, I didn't get filled. And gave another long over here, which would have been a break even trade. And then we picked up another 8 ticks right here to give us +16 on the morning. Then we had 3 break-even trades right in a row. Break even, break even, break even. And one last trade right here toward the end of the morning session that we missed. And then we get into the break. Now, during the break, looks like there was a long opportunity here. And hang on, I'm trying to scroll here. There's a long opportunity there and a long opportunity here. Okay, and it's pulling back here right now. Pulling back here right now toward the BBC, possibly giving us a shorting opportunity. Okay, keep in mind we have the low of the day right here and dynamic support right there. Okay, so all that's going to be broken through. Let me check and see. Russell and Brian, I have to send you guys the link for this afternoon. Okay. Well, that was the morning session. Okay, so we'll go through it again here on the spreadsheet. We made 4 ticks on the euro. We lost 6 ticks on crude. And we made 16 ticks on the ES, +165 this morning. Today it took 21 minutes and 1 trade to get to the goal for the day. And We took a total of 13 trade opportunities. So on the month now, we're up $1,500. That's over 9 days, averaging 166 per day. On the year, we're at 10,040. That's over 83 days, averaging $120 per day. Okay, now if you have not taken a free trial with us, go to the home page at CFRN, and in the right-hand column, right here, it says 5-day free trial, apply.cfrn.net. If you click on that, you'll be brought to this page, where all we ask for is your email, your first name, how you found us, and you hit the submit button. Once you hit that submit button, you'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't click the confirmation link, we don't know that you took the free trial. So you got to click that link, okay? Okay. And that's all. With that, we can pass it back out to fabulous Phoenix, Arizona, Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
We are indeed. We
Excellent.
are indeed. Recap of the recap.
Today, it took 21 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 per contract.
That's a good bingo.
It is. 1 trade.
All right, you got a dash?
I'm going to have to in a few minutes here.
All right.
Let me just check and see if John's in here.
He's on his way.
Okay.
He'll shuffle in. Me and Val keep an eye on it.
Okay. I have to create that meeting.
Okay. All right, guys. Let's take a look at where we are. I'm going to pull up the alerts from last night. We'll take a peek at that. Okay. We are in week 41. And with that big gap open last night, that you can see right here, we established our gap fill positions on the S&P, on the Dow, on the Russell, and on the NQ. None of those have triggered yet. We got 1, 2, 3, 4, no triggers in a row. Crude, that's a good bingo. All right.
Okay. John just popped in.
Did he? All right.
Yep.
Hey, John, welcome to the show.
Oops. There he goes. Okay.
Hi.
Hey, John. How you doing?
Hi there. Well, quite a few of the things we've been talking about have come to pass, including, in spite of this rally back on Friday, I think you actually pointed out that it was a kind of a lower low type scenario, lower high, lower low. And last night's gap down, we had 2 gap downs in a row. We had a double gap. We had a gap the previous week.
That's
remember?
Right. Mm-hmm.
Which
that one's never filled.
Right. And this changes everything because unfortunately, as I said last week, sort of going into Tuesday, Wednesday, and the way things were working out, because we did have a lot of choppiness, if you remember, that we could set up for a potential 87 light. That kind of got negated by the rally on Friday, at least temporarily, but it kind of got reinstated last night with this gap down. And the fact that we've taken out everything now and we're making new weekly lows, in fact we're making drastic new lows. This is kind of how 87 happened. So it started accelerating. We with the couple of rallies we've had, was sort of what happened in 87, and then what are we going to watch is I think remember if we talked about 1,000-point down day possibly unfolding, and I said
I mentioned that at the beginning of the show, John. I said, John had mentioned the potential for 1,000-point down day, and here we sit down 650 points on the session.
Yeah, thanks. So it like everything, it didn't quite work out exactly as we thought it would. But we did catch that rally back up on Friday. We got all of that rally actually, pretty much, and automatically reversed last night on this down move. So because we had some sell orders based, I had some hourly sells off that rally high, so they were triggered, and I'm just mad at myself for not getting out, right at the highs on Friday, because it was probably the smart thing to do. But there was always a chance they might have pulled off a deal at the last minute. And normally one would expect that might have happened, given the way that we rallied as strongly as we did on Friday. But what this has done. Can you squeeze up that chart a bit?
Sure.
Show a bit more, because we kind of put in a double top there, and I think the
talking about right here.
Yeah, and if you look at it, what it kind of looks like is you started a down wave, a 1-2 wave of sorts off this 2,900 level last week, and you had a couple of two waves, secondary waves, a double 1-2. That's effectively a double 1-2 with a downside gap. That's looking like a third wave to the downside that we're in right now. In other words, what's changed is the fund managers are sort of throwing in the towel. Tesla is making new lows, Amazon, Google's making new lows, Boeing's making new lows. It's just not the same bull market as it was before. It's definitely fracturing a lot, and as I mentioned last week, we looked at that stamp STMP that got divided by 10, and this is unfortunately, when you see these things, it usually means we're in trouble. So, and remarkably, the crazy thing about this is it is tracing out the 87 scenario exactly dollar for dollar, except it's 1 month delayed. In 87, we're coming up on the 15th of May, and I think around the 15th of April was when, tomorrow, maybe Wednesday, maybe we get a rally into the end of the week. So we could put in a low tomorrow and have a pretty strong rebound. Remember we had a bad Tuesday last week, I think. And yeah, we did. And then we rallied on the Wednesday, which was that's the first Tuesday we've been down in a long, long time. So we are definitely in trouble. And the VIX, as we're looking at, the VIX has been grudgingly going higher, although it certainly accelerates today. It's having a big update today, the TVIX. I'd say there's some more to go, unless we get a late rally today, which sometimes we can. If we get down 600-700, 650, if we can hold a 650 down on the Dow, there's a chance that we might have a late rebound. But it doesn't, all the signs are really looking very, very bad indeed. This is the worst kind of downside break we've had in a long, long time. Really.
I just glanced over the screen, John. At CNBC, they got Mr. Wonderful on.
Oh, yeah?
He looks a little green, He's normally very cheery and happy and smiley and, Mr. Wonderful, but he looks like he might throw up. Apparently, he didn't see this coming.
Well, a lot of people didn't see it coming. And, I'm glad that we were able to get some warning out on this show to people to be, I warn people to be extremely careful and to be selling new lows, no matter what. I've been absolutely, by new lows, I mean new hourly lows, new daily lows. And so far that's worked out pretty well.
John, we've been preaching this price right here, 28.05, since we put in the high on May 1st.
Yeah. No, good
Resistance,
great call on your
resistance, support, and I'm looking for a bounce here. If we can get down to 28.05, I think we're going to get a bounce.
We could get a bit of a bounce, and then if we make a right shoulder, see that right shoulder, and then roll over, sort of down toward 2,600, then we're in a lot of trouble, for sure, or 27 at least for starters, and then 26. So but look, don't despair, because even though the news is fairly black today, what you've got to keep your eye on the bull. We're going to make this bottom most likely in the next month, very similar to what happened in '87, and it may get real volatile. We could remember in '87 we had this first break that it looks like we're on right now, and it did get we had a 10% down move. Actually it was 11%. Then we rallied 12%. We made a nominal new high, and then we were down 13%. And you know what? That could happen in the next month, because you've got such a dynamic. Maybe there's a promise that this China deal is going to happen, and all of a sudden, market roars to a new high, fails. We have another impasse, and then finally it gets done maybe by the middle of June. And remember, we got all that European stuff out of the way, the elections and everything, so the market has much more reason to rally in June. I think Trump is probably not feeling too bad today, in spite of the market being down. I don't think he's too bothered about it at the moment. And the reason why is because I think he would give anything in the world right now to give the Fed cover to lower rates. There's been a couple of articles, I don't know if you saw them out on the weekend or last week, about the possibility of a melt-up in the market. In other words, if the Fed did lower rates by 0.5%, even 1% here in the next few meetings, you could have a melt-up going.
Where are we at now? 2.5.
Yeah. So and that would be enormous, because if we did get a melt up into the end of the year, it would be perfect, because it would kind of the economy could potentially be hitting on all cylinders by the end of 2020, November sort of time. So. One of the things that was interesting today, the Chinese talked about not buying bonds and maybe even selling bonds. Right now, bonds have rallied. So, but if they did start to sell bonds, it would sink in almost perfectly with the '87 scenario, where you could have that melt up. You could have a 30% melt up, for whatever reason, including the stronger economy. So in spite of the tariffs, imagine if the economy keeps this performance going, the market's probably going to rebound and probably going to make new highs, and maybe even substantial new highs. So it's probably going to be very, very volatile here in the next few months. Now, one of the things I'm glad about is I did put I haven't put a buyout on gold for a while. We put it out on Friday, I think on Thursday or Friday, I forget which day, but we definitely put a buy gold, buy all the gold stocks and buy the golds, the metals. And the gold is up $13.50. It's gone through 13. This is a pretty big deal today. The silver is underperforming a bit at the moment, but if it catches up, that would be a good thing. But right now, gold looks pretty bullish on the chart, to tell you the truth. And you don't have to be a rocket scientist to figure out that if a lot of goods are going to end up being 25% more expensive, a good amount of the goods that people buy every day, like, just TVs. I mean, it just means that instead of getting the deal that we got a while back at $350 for a 55-inch screen, maybe 4K, it's probably going to be about $425, maybe even something of that nature. So the TV screens TVs in general, so many of them made in China, they're likely to jump pretty dramatically. A lot of electronic goods. So it's gonna create. I mean, if this doesn't give us 5% inflation across the board, or even higher, 7 or 8% inflation, I'd be shocked, to tell you the truth. So and I don't think Trump's gonna, once these tariffs are on, he's not gonna take them off too quickly. I think he wants to sort of trust but verify. You know what I mean?
Yeah.
And he's already said that. So there's a very, very good chance now that the metals could rally really, really big into the second half and into the end of the year. And look, there's a few people out there who've been saying that there's a central bank or some kind of bank is short a huge amount of gold. They've been trying to break the market down so they can cover their shorts. That's out the window today, and it's really, I mean, if you look at the gold that we've been looking at on the show, check it out now and see how it looks on the weekly. It's got a pretty neat little buy signal, which we pointed out last week. This double weekly reversal.
What do you want to look at it on? What time frame?
On the weekly.
Here,
well, you can put it to the daily and then the weekly, I guess. So.
Yeah, let's go to daily. Yeah, right here. Yesterday. Oh, now on Friday, you and I were talking about this, and I talked about the fact that from December 26th to the recent high. No, wait. Let me scrunch this up a minute. Yeah, it was actually from the August 14th low to August 14th of last year to the February 20th high of this year, that we had hit a 50% Fibonacci retracement, and that we had gone back and forth from the 50 up to the 38, back to the 50, and we talked about this double bottom here, and we talked about that being incredibly bullish. And after these 3 down arrows, I put this up arrow in on Friday, and because I agreed 100% with what you were saying, and well, here we are.
Yeah, and have a look at it on the weekly now, because the weekly kind of tells you the story about how big of a move could lie ahead. And I was actually, honest to God, I was looking at the gold last night and thinking to myself, scratching my head and saying, why isn't gold up already based on these tariffs? Because it's pretty much of a no-brainer that prices are going to go higher. And the dollar, even though the dollar's rebounded temporarily here this morning, I think the dollar's in trouble now.
Here's your weekly.
Yeah. Well, look, it's look at the way we've gone up. We put in that big double bottom in
August of last year,
right? Mm-hmm. And look at how it's tested. Each time it's gone up and tested and up and tested and up and tested, and now
they're going to retrace.
It's sort of a 1 2 1 2 1 2 1 2, and this is a big 2, and it looks like we're going into a third wave here. This is and look, what you got to understand is when you go into a third wave, it's not, all the history of the 1 2 1 2 is out the window. It's kind of like 2009 through 2019. We've basically been in a third wave for the last 10 years, and it's pretty incredible what can happen in a third wave. And we're overdue for a third wave in gold, and so look, the third wave should be at least 1.6 to twice as big as this move that we've just had from 1160 to 1360. It's about a $300 move. We should get at least a $300 move to the upside from here, and possibly even more, much more. And that's and there's enough things going on in the world today to cause gold, to be, running out of time or living on borrowed time in this market. And the more the Fed have to do to keep this recovery going, and they've got an agenda, they've got a directive, if you like, to do that, it sort of makes sense that gold is going to be, the performer. And what's particularly good about today is, when you get it, this is a pretty big deal today, because it's, gold had every chance to break down in the last few weeks, and they couldn't break it, and now it's going up, and the gold stocks are finally kicking in, which was, they were lacking earlier on. This is starting to look like the beginning of a very big up move in the gold. So let's talk
soybeans for a minute.
Oh, listen, I saw this show, this agricultural show they have on every week, and I mean, you can trade off this show, I'm telling you, because they haven't been bullish on beans for a long time. To their credit, they've just been saying it's never been like this. I mean, they're saying it's the worst case scenario, the worst downturn in beans ever, and it's rough. I mean, there's a swine, there's a huge problem with pigs in China. There's a big swine flu, and it's supposedly wiped out 20% of all the pigs. And China's got such a huge pig operation that it's a really, really big deal in global terms.
Right.
It's a really big deal they're saying that 40% of, it's almost like 40% of the global pigs operations have been wiped out. So what does that mean? It means there's 40% of less pigs to eat the soybeans and eat the corn and everything. So that's another factor that's driving down the beans. I mean, who'd have thought of that? It's
interesting.
Yeah. So it really is kind of a 100-year.
Well, here's the deal. I think you might know the exact number, but I think we're relatively close to driving the price of soybeans below the cost of production.
Yeah. And
when that happens, everybody quits growing soybeans. And so when everybody quits growing soybeans, suddenly there are no soybeans. And guess what? Then prices skyrocket.
Yeah.
True supply and demand, something we don't see in the indices, but we certainly see it in the agricultural markets and the metals markets.
Yeah. So what's interesting today is there is a little bit of a bounce off this report that came out and wheat is higher and corn is higher. So, that's a sign that the bottom is close. And we pointed that out last week, if you remember. We sort of said that corn in particular had a very good bottom on it, as well as wheat. And if you look at the...
what is corn, at ZC?
I think so,
For
yeah.
Continuous, yeah.
So, there's corn actually right now has a potential.
Oh, yeah, look at that. That's a beautiful thing.
Yeah.
We just got to take out. Now, I don't have the numbers on hand for corn, but on soybeans, and I explained this to our traders last night, for those who have the ability to hold a contract multiple days, I'm not suggesting they get long soybeans just yet, but if soybeans can rally up just $1, even $1, okay, that's $5,000 per contract traded.
Yeah, it's a big deal.
A 1 cent move is $500.
I think 800, getting back over 800 today, getting up 800, 803 could be. And look, Trump's talked about buying beans off the farmers and sending it to poverty-stricken countries, which I think is quite an interesting idea. And they're basically going to bail out the farmers anyway, so they've got to use up the inventory. So rather than just bail them out and have I think that's a smart idea, and it would get rid of the overhang in the beans. So that's the sort of thing that could kick off a bull market. too. And when you start seeing the gold go up like this, on its running its own race and catching up to where it should have been with against the platinum and the other things, it sort of starts to lead the way higher. It could potentially lead the commodity index higher. Now, another problem, which may be tariff related, is the cotton, which is a kind of a fairly sensitive economic indicator, is plunging big time. I mean, I think it's making massive new lows here. Maybe I don't think I've seen cotton at this price. God, I can't even remember when it was at 65, to tell you the truth.
I can never seem to get a good chart on cotton. I'm missing something somewhere.
July cotton?
Well, cotton futures.
Yeah, that's.
And.
Try July, there you go.
Yeah, see, I get this.
Maybe it's gotten real thin,
Boy, that's thin. Just looking for, I think I saw a cotton ETF.
Yeah, look at that. So, there's a lot of factors behind that. The Pakistan, the big cotton producing place, and Egypt as well. Maybe they're suffering from the same. This is what climate change does. It brings you record crop yields all over the world, and that's the biggest impact we're getting right now. Is it warm or cold today over in Phoenix?
Today, right now, it is 73 degrees.
Yeah, it's kind of cool, right?
Yeah, it's nice, very nice.
Yeah. It's
high today will be.
This weather we've had recently has been very uncharacteristic for this time of the year. Actually.
Oh yeah, the high today will be 91. Anytime it's under 100 in Phoenix, it's a beautiful day.
Right. So what I'm trying to say is it's kind of cooler it's seasonally cooler.
Oh yes, absolutely.
Than usual. Yeah, that's the thing. So that would be a shocker if we got a cool summer. All of a sudden, the signs of a potential ice age going. So
I'm sure the global warmers can explain it away.
Yeah, I was going through some old stuff last night, and some of this. I mean, we've said it on this show as long as a couple of years ago now. This whole thing, this Russia hoax, was rotten to the core, and all this stuff that's coming out about how the CIA is involved and the Brits. I mean, imagine the Brits nosing around in the U.S. elections. It's just outrageous. And him trying to, and this Steele guy and all the mischief they got up to, and this Harper, and the way they tried to entrap Papadopoulos and Carter and everything. I mean, it's an absolute outrage, and I think it's going to become a very, very big deal. A lot of people could end up in big trouble, I think, for this scam. And I think one of the things that might come out is if it goes that far, they start investigating these journalists and find that they've been receiving payoffs from the Democratic Party. I'm not saying that's the case, but there have been some reports of that out there already, and gifts and all kinds of things. I mean, it's just sick to the core, the whole thing. And I mean, what's their problem? This guy, some of the people on MSNBC, this Heilemann, and all these people so anti-Trump, it's just crazy. I mean, what's not to like about life today in the U.S. apart from this scourge that we've got to get through? I mean, it's absolutely a utopia compared to almost any other period in history. Don't you think?
I do.
And hopefully it's going to continue. I think if we can get through the 2020, they can win back the House. They'll really get some stuff sorted out in the next administration. They'll fix this border problem once and for all, and fix a lot of other problems out there too.
Yeah. Well, here we go. We're coming up on, we're 1 point off our target at 28.05. 28.05 and 3/4. Now this may not turn on a dime, guys, and there's no guarantee that the 24% Fibonacci retracement is going to hold. If it doesn't give us a bounce, I'd be very, very surprised. If we trade through that 24, you got to watch the 38 right here.
This really is an 87, kind of an 87 scenario in the making, because the it's 1 o'clock on a Monday, and the market's still making new lows. We may get that bounce you're talking about, but if that bounce turns into another sell-off, then you could have a really. The Chinese market looks terrible. I was looking at it this morning. We talked about this a long time ago. I remarked that, all this stuff about 6% growth in China. If the economy was growing at 6% growth in China, the market would be at an all-time high, and it's not. It's way off the highs. It hasn't been at an all-time high in a decade or longer, and that tells you a lot about China, plain and simple. Maybe the China miracle is unraveling as we speak. This is going to cause a lot of companies to come back, because their edge of producing in China has been eliminated. They're going to go to Vietnam or Malaysia or even North Korea eventually, places like that. So this is a pretty big upset. I hope they get the memo and come back and make a deal for their own good and for the good of the world. And look, the odds are fairly strong that that's going to happen. So you got to keep your eye on the ball. We've been very fortunate to have laid out the scenario of 87 for a long time ago. We identified the similarity in this year with 87, and it is, apart from the fact that it's a month late. In other words, the correction's happening in May. It's pretty much it's amazing how similar it is. And one of the hallmarks was that the dollar, was strong until the middle of May, which this year means probably the middle of June. So we may still have a little bit more dollar strength to get through. But at some point, maybe it's going to be the Fed. Maybe if the Fed lowers rates or something, causes the dollar to sell off, that would be, and possibly even go into a death spiral, then you're looking at a melt up in the market. But in the meantime, here we are on a Monday afternoon. It's very, very similar to 87, except 87 in terms of April, not October. In April 87, and it's the odds. Sometimes when we close on the lows, they can rally the market during the night to try and avert an 87 type setup. But if they can't do that, and we gap down on the Tuesday tomorrow, we could be looking at a kind of an 87 scenario. Now, what I would look for tomorrow morning, because I would look for a bottom, maybe around, if we do gap down and it's really scary, and we could be down 500,000 points, either later today or tomorrow. Maybe if we're down 1,000 points today, or even down where we are right now, which is 700 on the Futes, or we're just about 700 on the Dow right now. So I don't think we'd be down 700 as early as 1 o'clock for a long time, if ever. And that alone tells us we're probably going to go down more than.
We talked about the curbs the other day. The Dow curb used to be 500 points. I know it's more than that now. Is it 1,000?
We might. I don't know what it is, but we're probably going to exercise on the Nasdaq today, because we have seen we're down almost 300 on the Nasdaq, which is really bad. But here's the thing. Look, if we just as a rough idea, if we're down 1,000 points today look for about a 500-point continuation tomorrow, or maybe even a 700, something like that. But down at that low end of the market, I think you're going to get a bounce. You've got to look for a bounce sometime in the mid-morning, and we might be in for a big surprise. There could be an enormous rally off this bounce tomorrow. So just look for that. Be very careful, because it's an incredibly dangerous market right now. Because as I said, there's an awful lot of upside built in on the Chinese deal. You've got fund managers now who are starting to panic, and they could be just wholesale dumping stocks, as they've been pretty much since the open this morning. And everything we've been saying, Garrett had this thing figured out a few weeks ago. He did a very nice, it certainly, it's just one of those things, when you get to a certain point and the indicators, look like they're rolling over, there's not much difference in the top that we just made with a lot of other tops in the past. And one of the standouts, which we pointed out, was that the emerging markets topped several weeks before the rest before the U.S. market. U.S. was the kind of last man standing, understandably, because of the way the economy's been going. But now, this doesn't bode very well for the immediate future, because it's taking the whole world down with it. So, and the rest of the world's already in pretty big trouble. So, I hope that the powers that be, sometime this month, maybe we're in for a real rough time here for the next month, going into the middle of June. The light bulb's going to go on and say, what the real problem is, the dollar's too strong, plain and simple. A weaker dollar will, in a way, will fix this problem with China in a pretty big way as well. So, because if the dollar the dollar gets devalued by 10 or 20%, that'll be a huge boon for the U.S. economy. There'll be another big boost for the U.S. economy. Why? Because U.S. production costs are going to drop relative to the rest of the world. And right now, the dollar is too strong, and it's strangling the rest of the world's growth. If you can ease off on the dollar, the rest of the world is going to roar back to life. Would you agree?
I agree, John. I sure do.
Yeah. So, half of the problem, when you look at the way Wall Street works, most of these funds are always long, and they go through these downturns, and it really affects their performance because they didn't get out at the top. Everybody says you can't time the market. Don't tell that to people on this show, because I think so. To be fair, we did warn. Listen, if you just did nothing else and just sold out of caution last week, ahead of what I said about the Dow going down 1,000 points, it's gone down 1,000 points since it's gone down altogether. I can tell you right now, it's gone down almost 2,000 points since the high. Actually, it's closing.
Down 680 on the day for the Dow.
Right, and it's. We were down about 1,200 points off the high on Friday, or maybe 11. So if you add the 6, we're closing in on 2,000 points down. So. And I did put that out on Twitter, and managed to get it out to everybody here. But listen, don't despair, because the big surprise may be how something may happen to get this market back up, and try and make it a trading opportunity if you can.
Very good. Well said.
Okay, doke. Right. Well, listen.
Thanks, John.
Yeah. By the way, the dusts are breaking down. Starting to break down, which it's been something that, let's just see how that looks. Just a second. Yeah, it's not perfect yet, but it is just about to break a trend on the dust. So, if we get a gap, we're probably going to get a gap up in the gold tomorrow in the gold stocks. If we continue as strongly as we're doing, and the gap down in the dust may be the nail in the coffin on the bear market in gold. But this is certainly a very welcome day in terms of how the gold is doing. Unfortunately, the palladium, which had a terrific day last week, remember it was up about $60-$70, has pulled back quite a bit. That's more than likely because of the Chinese, the tariffs are probably, what's the word, affecting that. But not all this, as not everything that we're looking at today is wonderful, because the commodity basis is in dire, it's in big trouble. It's got to rally. It's got to start rallying from here to really get the world fired up, if you like.
Gotcha.
Okay, well, listen, thanks very much for the invite, and have a great afternoon.
You too.
Just one final thing. Did you see the Grand Prix? Hamilton won again.
I did not catch it.
Listen, he's Mercedes have had 5 wins in a row now, 1-2. That's never happened before. Interesting thing about all the competitors, it's definitely getting more competitive. Yesterday, I think yesterday was the closest race I've ever seen, from the first to the last, where the distance, between each car was literally in single-digit seconds. Normally,
wow.
you get cars that are a minute behind, or 2 minutes behind, things like that. It was about the closest race ever, and that's
pretty
really
efficient.
good.
Yeah.
Yeah, sure. It means that it's going to get much more exciting, and that's a good thing. So, Nick Hamilton's in the lead again, but he's definitely got a tough year to win the championship back to back. But he might pull it. After yesterday, he's probably going to do it. By the way, there's a I don't know whether anybody watches American Idol, but sometimes I watch it. And
I used to watch it. We used to watch it as a family every week, but we fell out with it some time ago.
Sometimes you get these stories. I mentioned one a while back where there was a black guy out of Philadelphia who almost won it. It was amazing. And they've got a guy now who's a dishwasher. He's a Hispanic. Mm-hmm. I'm telling you, this guy could be another Elton John. He's just unbelievable. Really? He's got the potential. Look, he's an unbelievable pianist, classical, any type of piano, you name it, he can do it. I mean, you got people like Lionel Richie and Katy Perry saying, in the presence of greatness. And this was, on his first audition. And the big surprise last night is his 2 competitors for the final. I mean, you can never say never, but they don't look like they've got a tenth of the talent that this guy's got.
I'll have to check that out. I think we still record it. I just haven't watched it.
And he's written all. Look, he writes all his own songs. This guy, with a bit of grooming, and he's probably going to get that. I mean, he probably needs he's like Elton John and Bernie Taupin, or Lennon McCartney. If he's got somebody who can kind of get with him on maybe a little bit more melodious songs, kind of like the Beatles, and maybe a bit more on the lyrics, this guy could be really one of the greatest of all time. I mean, nobody ever on this show has said, we're in the presence of greatness in the first audition, and this guy's carried it off right through to last night. It's quite an experience, and he's so humble. It's unbelievable. This guy, he's a busker.
This guy,
Andrade. His name is Alejandro Andrade. He's really something.
Well, you would think they might. Well, anyway, nice hair. Which 3 contestants are in a spot in the finale?
Just had him there.
Okay, let me back it up again.
There he is.
All right, now.
Yeah, there's
right
there
here. This
right.
guy. Okay.
That guy. Yeah. I mean, this is him playing the piano. I mean, give me a break.
Unfortunately, you guys can't hear it because it doesn't pipe sound through this go-to. People on YouTube could hear it.
He could also be a classical guitarist of, of world renown. He really has it. He really has it. It's just incredible.
Now, it says Elton John. Oh, he's singing an Elton John song. There's an Elton John movie out.
I heard about it.
I haven't seen it, but I've heard it.
Yeah,
I've
look
owned.
Look at the headline. Kitty breaks down. I mean, that's the reaction to this guy. I mean, people are kind of weeping about him.
I've personally owned 2 albums in my entire life, and one of them was Elton John, Yellow Brick Road, when I was about 15.
So, well, listen, have a great afternoon, and see if we can get through the next 24 hours in one piece.
All right, John.
Okay, thanks a lot.
Talk to you soon. Bye-bye. Okay, guys, back to the S&P 500 Emini Futures. All right. Last night, our Concierge Trade Alerts said to consider being short 28.41. Logic 247, which I showed you just a second ago, right here. $28.50 to $28.48, trail if possible. So we came down, we put in a low at 44.25. So basically a 6-point move. Important prices, important areas, almost always tested. Price gets back above the entry, the trigger, bumps its head on last week's lowest weekly trading zone. And I got to tell you, when the market does something like this, we call that a gift. And if you layer something on like this, how much sweeter can it get? Because we know that when price pulls back to the BBC on this chart, it's going to hold more often than it doesn't. And we know that when price pulls up to a weekly trading zone from below, it's going to hold more often than it doesn't. And how far did we drop? We'll call it 2,800 for argument's sake. We'll call it 2,802. It's 2,802.25. 2,802.5. Call it 2,803. It's a 47-point drop. 47. It's $2,350 per contract. You with me? So for a 10-contract trader, a person who has earned the right to trade 10 contracts, you don't just go trade 10 contracts because you got some money in an account. No. You earn the right, and once you earn the right, well, that turns that move into $23,500. It depresses me to say that some people in America who work 40-plus hours a week won't take home $23,000 this year. We are at a very unique place in time, history, technology. No exit signal yet. No exit signal. No exit signal. When this move is over, it will be reflected right here. Price will walk sideways, right? The step line will cross, and we'll get an up close. Over and over and over and over. Now, on the Dow, let's take a look at the Dow. think this got shorted out by like 2 ticks, but then it turned around and it triggered again this morning and it ran the distance. But the first time, I think it did. I think it stopped out by like 2 ticks. Let me take a look at it. Okay, the Dow 25660 to 25620. Trail if possible. And trail if possible means trail in the absence of a sell signal or an exit signal. So let's go find 25660. 'Important prices, important areas, almost always tested. Two 25660. Okay. And target down at 220, got down to 608. Trail if possible. So you get the initial move, back above the trigger, bumping up against that old weekly trading zone, bumping up against the BBC, and here it is. Follow the leader. Okay. When this move is over, price will begin to walk sideways. You'll get a close above the step line. A green candle, a short move above the step line. It's not going to get you out at the swing low. Can't get you out of the swing high. Nobody or nothing can but luck, because you don't know it's the swing high or swing low until after the fact. Am I right? Right. So from 25,660 to 25,220. What is that? 400. Get my head hurt. 25660 minus 25220. It's 440 times $5 a point. It's $2,200 per contract traded. And there's still no exit signal. The NQ, $3,600 plus per contract traded. It's fallen some since I put this up. No exit signal yet. Still waiting. Now, crude on the daily double today. And on each one of those, there was corresponding concierge trade alerts. As a passport holder, you have unlimited lifetime access to our 24/7 alert service, Logic 247, as well as the concierge trade alerts. Okay. Between the two, you can almost always find a way to pull that daily goal out of the market, whatever your goal is and whatever market you trade, because remember, everything that we do is fluid across every market, every time frame. Don't know if you've ever stumbled into that before, but it's kind of hard to find. I said fluid across every market and every time frame. If you want to learn more about what we do, how we do it, how our traders, our passport holders, are able to participate in moves like this, book a one-on-one mentoring session, or just email support@cfrn.net. Call us at 949-42-EMINI. You'll talk to Valerie. She'll be happy to set you up with a mentoring session. I'll be happy to spend 45 minutes with you, absolutely free, showing you exactly what we do, exactly how we do it, answer all of your questions so that you can make an intelligent decision as to whether or not what we do is right for you. It might not be. I'd love to hear about that. because it's sure been good to me. How about some good word for the day? You up for that? I am. Been talking the last couple days about restoring damaged people. John 4:4 says he needed to go through Samaria. Why does the Bible say that Jesus needed to go through Samaria? Well, he needed to go through there to redeem a damaged woman who was called to introduce the gospel to Samaria for the first time. Now think about the situation that Jesus faced. The heat was smoldering, the journey was long, and he was on foot. He knew he wouldn't be welcome there because of a long-standing animosity between Jews and Samaritans. Women in those days veiled their faces and were forbidden to speak to men outside of their own family. This woman was already the talk of the town because she'd been married 5 times. I say big deal, so was my mother. Well, 4. My dad was married 5 times. But the 5th one stuck, lasted about 30 years. So why did Jesus feel he needed to go through Samaria? Because he saw this woman married 5 times, this woman who probably carried some labels that we won't talk about here on family radio. He saw her, Jesus saw her, as only God can see you. He saw her as a diamond in the rough. He looked beyond her problem and saw her potential for his kingdom. The Bible says in John 4:39, many of the Samaritans of that city believed in him because of the word of the woman who testified. Now, there's an important lesson here. The schedule didn't control Jesus. The will of God and the needs of hurting people did. He was willing to go out of his way, overturn tradition, and even break new ground to do it. Notice what Jesus told his disciples afterwards. Do you not say, there are still 4 months, and then comes the harvest? Behold, I say to you, lift up your eyes and look at the fields, for they are already white for harvest. And he who reaps receives wages and gathers fruit for eternal life, that both he who sows and he who reaps may rejoice together. That's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.